Hi there, my name is Jeff Hall, and today we're going to talk about the latest in the world of crowdfunding. And we have as our guest today Richard McKay. He's a CPA, he's a Berkeley Business School graduate, he's a smart guy. I've known him for a long time. He's very involved in the world of crowdfunding. But Richard, let's keep it really simple to start. Walk us through where we have been. It used to be Kickstarter, and then it became accredited investors. Now it's going to be wide open for anybody. Tell us about the evolution of crowdfunding.
Well, initially when Kickstarter opened their doors for business and some other sites to do the same thing, you were not allowed to sell securities, and that's what this is when you invest in a company, online. So to raise money for their business, they would ask you to make a donation or pre-purchase a product like the Pebble watch. And then they would use that money to jumpstart their business. Okay. So.
And then accredited investors.
Well, now there was
What
a law.
What is an accredited investor?
Well, an accredited investor is defined as someone who earns at least $200,000 a year and expects to continue to earn that, or has $1 million net worth excluding their personal residence. So it's really a means test and not a sophistication test. So the Jobs Act, which really we call it the Crowdfund Act if you want, made it legal for people to actually sell investments through a website. And there are several parts of that. One is what we call accredited crowdfunding, which is a way for only people who have meet that accreditation standard to invest, so you can invest as much as you want. And then there is what everyone calls equity crowdfunding, which anybody can invest in these, but they limit how much you can invest based on your income or your wealth. And it's usually not very much. The maximum can be raised under that particular rule is $1 million a year per company.
Do you think this is going to be a big game changer?
It's very, very disruptive. We've seen it already in the peer-to-peer lending sites where you go online, and I did this week just to try it out on Lending Club, where I applied for they sent me an inbound ad. I applied for a loan and I got approved, but the rate's ridiculous. I'm not going to do it, but I just want to see how the process. So what they do is they take the loan I want and they sell it to hundreds of investors, buy a piece of that loan. So that was how and that's a consumer finance. Why it's disruptive is the bank is charging you 18 to 28% for your credit card, where you can borrow money from them for 8%. The bank will be out of that business. So that's one.
So do you think there are a lot of small companies sitting on the sidelines now just getting ready to do crowdfunding the moment it's okay?
Well, I think a lot of them already been doing since it's now available. Like Crowdfunder here in Venice, right? You can go on there, and what's happening is the companies that go on these sites, they now have venture capitalists trolling these sites for future deals. So they'll, like Tim Draper, for example, is a regular on Crowdfunder, invests in deals, and I've seen him interviewed on that site. So they watch the deal, they see what kind of reception it gets, and then they start talking to him and see the progress, and then because they can't invest these small amounts of money.
Now, you're involved with a crowdfunding deal of your own in the real estate sector.
Yes, real estate sector. It's projected to be the second largest sector behind consumer finance, which is Lending Club and Prosper and companies like that. There's $1 trillion a year in commercial real estate transactions, capital transactions a year globally. This year, there'll be about $2.5 billion that will go across crowdfund platforms. Our platform is more focused towards sophisticated investor, because real estate are large transactions.
Which I am not, but if I were, and if I invested in your company, you would then go take it and go build a building someplace?
Well, yeah, building, the crowdfunding for real estate, though, what it really is at the end of the day, if people remember syndications, it's just an automation of the syndication process, how by people or institutions buy a fractional interest in a deal they couldn't otherwise get into. But now it's ubiquitous, it's global. So with our site, we have English, but we're going to be going to a Mandarin site, an Arabic site, and a Hindi site, because we have relationships in China and the Middle East and in India. They're interested in being able to offer US-based real estate investments to people in their country, because it's highly desirable over local, because of the market is considered safer and more secure.
Okay, so we are running out of time, but you'll come back again and we'll talk about this some more?
I'd love to.
Great. There you have it, the latest.